Guys, your edge isn't what you think. Most retirees managing their own portfolios are trading on gut feelings that they mistake for experience. And Mark Douglas's first rule of consistency exposes exactly why that's burning through savings. There's a principle every chef knows that fixes this. I'm going to show you that principle in a moment. But first, something that's probably uncomfortable to hear. If you've been trading for any length of time, you have a feeling about what works. You watch a certain pair, you notice a pattern. You get that gut sense that says, this is the move. Sometimes it works out. Sometimes it works beautifully. And that's the most dangerous thing that can happen to you, because when a gut feeling pays off, your brain files it under skill, not luck. Not random outcome in a probability game. It files it under, I know what I'm doing. Now you've got a retiree sitting in front of a screen, risking a nest egg that took 30 or 40 years to build, making decisions based on feelings that masquerade as experience. That's the problem Mark Douglas identified. It's exactly why the 7 rules of consistency start with rule number 1, I objectively identify my edges. Know exactly what gives you a statistical advantage in the market. No guessing, no hoping. Read that again. Objectively. Not, I feel like I have an edge. Not, this setup usually works. Objectively. You can define it, measure it, and repeat it, and verify it with data you've actually collected from your own trading history. Here's where most people get stuck. They hear identify your edge and think it means find a good strategy. That's not what Douglas is saying. He's saying something much more specific. You need to know with statistical clarity what conditions give you a higher probability of winning a trade versus losing a trade. And you need to know that before you ever place the trade, not after. Not while the candle is forming and your pulse is up, before. Which brings me to the kitchen. Chefs have a concept called mise en place. It's French. It means everything in its place. Before a chef turns a single burner on, every ingredient is measured, every tool is positioned, every element of the dish is prepped and ready. Nothing gets figured out in the moment. Nothing gets improvised under pressure. The decisions were made before the heat was on. Now think about how most people trade. The market opens, price starts moving, and suddenly you're scrambling. You're reacting. You're staring at a candle trying to decide in real time, convincing yourself a hunch is a strategy because the position's already open. And you need to believe that you made the right call. That's cooking without mise en place. Walking into the kitchen with no recipe, no prep, grabbing whatever's in the fridge, and hoping dinner turns out. Sometimes it does, but you could never repeat it if it does. And you definitely couldn't teach someone else how to do it. Here's why that matters for proof. And I want to be direct about this, because most trading education completely skips it. If you cannot repeat the process, you cannot prove your edge exists. A gut feeling that worked twice is not evidence. It's just noise. A defined, documented set of conditions that you've tracked across dozens of trades, entries, exits, market context, outcome, that starts to become evidence. That's what separates a retiree who thinks they have an edge from one who can actually demonstrate it. Objectively identifying your edge means you treat it like a recipe. Specific ingredients, specific measurements, repeatable every single time. You define the exact conditions, the specific confluence of signals. and you give yourself a statistical advantage. And then you document what happens when those conditions are present versus when you bent the rules over time. That record tells you something your gut never can, whether the edge is real. And if those conditions aren't present on a given day, you don't trade. Simple as that. You sit on your hands. You close the laptop and you go play with your grandkids. That's not weakness. That's what separates a retiree who trades from a retiree who trades well. Here's what most trading educators won't tell you. They show you the winning trades, the highlight reel, the screenshots where everything worked perfectly, but they never show you the 4 lost days. They never show you the weeks where the best decision was no decision at all. They never show you the trades they passed on because the edge wasn't there. And they almost never show you a trade log, the unglamorous spreadsheet that proves over time whether any of it actually holds up. That's the part that actually matters, because when you have a defined, tested process, you know what your edge looks like. You know when it's present and when it's not. You have a record that tells you how it's performed, and you make every trading decision from that framework instead of from anxiety about whether your retirement savings will last you another 15 years. Think about that for a second. What would it feel like to close your trading platform knowing that every decision you made came from a defined process, not from fear, not from greed, not from that nagging feeling that you should have gotten in earlier or held on longer, from a process you can look at, review, and improve? That's what rule number 1 is actually about. Not find a good setup. Build a relationship with probability. Trading isn't being right on this trade. It's about executing a repeatable process across dozens and hundreds of trades where the math works in your favor over time. And where you have the records to know whether it actually does. Mise en place. Everything in its place before the flame is lit. Your edge defined before the market opens. Your criteria written down, tested, and documented before you risk a single dollar of the money you spent a career earning. That's how you stop gambling with retirement savings and start operating like a professional. By the way, if you want to see a repeatable, probability-based process actually looks like in practice, what that looks like in practice, including the losing weeks and the losing days that most educators hide, and the kind of documented review that holds a strategy accountable, head to SorianoFormula.com. You'll get a weekly Forex review and an indicator strategy, as well as a 7-day test drive that puts everything we just shared and talked about into something you can actually follow and verify for yourself. Links in the description below. Have a great day.